again to today's edition of Top Tier Profits for Real Estate Investors with Shemie CPA. My name is Matthew Lippman. I'm a senior manager here at Shemie CPA, where we deliver premium accounting services to real estate investors to help drive profits and growth. As always, we have our founding partner, Charles Shemie, CPA CA, that is here to discuss this. That's here to discuss with me today. How are you doing, Charles?
Great, thanks. How are you doing, Matthew?
I'm good, thank you. I'm great.
Great.
So
Good.
I thought that the topic today is an interesting topic, and it's limited partnership syndications.
Sounds good. Let's get down to it.
Great. So limited partnership syndication is a structure to raise funds for real estate investors. Is that what is a limited partnership syndication?
Well, Matthew, a limited partnership is basically a partnership of various partners or investors, and it's like a regular partnership, but what's different about the limited partnership is that the partners are limited in terms of their liability. So whatever the partner, okay, let's go to a regular partnership where you have a few partners, you go into partnership. Well, you have a liability over and above of what you invested. They can come if the project goes south and it doesn't go well, creditors could come after your other personal assets, and so you're not protected at all.
I see.
A limited partnership, the limited partners are protected, they're exposed to the amount that they've invested in, and that's all. They cannot go after any other one. So it's actually a very good vehicle for people who don't want to take unnecessary risk in going into a regular partnership. But of course, there are other downfalls to it, which we can discuss whenever
Awesome.
you're ready.
Great. So who usually sets up these limited partnerships?
I mean, it could be complicated, and usually it involves many partners. A limited partnership usually involves, but not necessarily, but usually involves a significant amount of investors.
Mm-hmm.
You would have law firms that specialize in this type of agreement to prepare these limited partnership agreements.
For sure, but is it like a promoter or somebody that's like who is the one that would use this type of structure as to run a business?
I mean, so if you have a real estate deal that's significant, that you need many investors, the person let's call him the general partner. That's what he is. He's the general partner.
Mm-hmm.
He would go ahead and to try to accumulate the investors and to determine how many investors he needs. He would most likely send out some type of IPO,
Mm-hmm.
which is basically a summary of the investment and the amount of cash required and the percentage holdings of each limited partner. So there would be a general partner, which would be the promoter, and he would also be managing the project. And then there would be the limited partners who are limited, like I said before, but they're also silent partners. They don't have a say in the matter, aside from the fact that there would be a yearly meeting, partnership meeting where you would vote on certain things, where this is where they would have their say. But the day-to-day operations would rest with the general partner. And he is also responsible for all liabilities over and above what's in it. So he doesn't have a limit to what he's exposed to.
Okay, so it's only the limited partners that have that protection, that liability protection.
That's correct.
Interesting. So as a promoter or like one of the general partners, why is this their go-to structure?
It's not necessarily their go-to structure. It's one structure, uh, because, uh, again, as a general partner, they may not want to have any other partners having a say in the matter. They want to control the project.
Mhm.
And, because from their standpoint, these limited partners are not exactly uh, experts or have any kind of experience in running a real estate project. So they don't want them to interfere in the operations. They want to make sure that they have control over the operations. So they set up a limited partnership to ensure that type of that vehicle will be able to suffice for that type of operation.
Okay, great. And how does it work for tax purposes for each of the partners that are part of a limited partnership project?
So that's a good question. For tax purposes, the year-end financial statements will be prepared, and let's hope that there's a profit.
Mhm.
So the general partner would issue a tax slip called the T5013 slip, which would basically detail the investment, and the amount of revenue and the profit attributable to each individual limited partner. So
Right.
depending on their partnership share, they would take a portion of that profit and they would have to report that in their personal income.
Okay, so it's not it's a flow through structure, right? It's not a taxable entity in and of itself, the limited partnership.
That's correct. It's a flow-through structure. The limited partnership does not pay. They have to file information returns, but they don't file tax returns, and they don't have to pay any taxes. The income, like you said, flows through to the limited partners and to the general partner if he owns the units also.
Interesting. And in terms of legal work to get this type of project set up, is there an agreement that the partners sign? What are some of the big terms that you would look out for in these types of agreements if you were looking one over yourself?
Oh, well, definitely, you would, as I said before, the law firms would usually do those types of limited partnership agreements.
Mhm.
They're quite hefty. There's several pages. I would definitely suggest to have your lawyer look at it and to have your accountant also look at it. It's very important because there's many tax aspects that you'd want to know for sure. Every partnership agreement, every limited partnership agreement is different. So depending on what the general partner wants, you'd have to make sure that you're in line with him as to what he's asking for and what your exposure is going to be. For example, they may say in a limited partnership agreement that in case of cash requirement, they would go to the limited partners and ask them for additional cash injection. And if you refuse, then your share of the total limited partnership would diminish accordingly. So so you may not want that. You may say, well, no, I'm not interested. I don't want that. I want to make sure that I own 10% of the partnership, and I want to stay that way. And I don't want to feel obligated to put any additional sums in.
Mhm.
So you've got to look at those kinds of things and see if you're okay with various clauses that the general partner wants to put in.
Okay, cool. Is there something that a lawyer would look at more than an accountant in these types of agreements, or vice versa?
The lawyer would look more at the liability of his client and what he's exposed to, and he wants to make sure that he doesn't have any further exposure. But that's the whole point of a limited partnership, is that he's only exposed to the extent of his investment. But there could be clauses in there that could that could over, that can go over that, and then they can still come after you. So you have to really look at all, the clauses. And again, from our side, we will look more at the financial aspects of it and to make sure that, what type of profits he's expecting, but that we would look at the prospectus, we would look at we would calculate the returns that he should be getting on a yearly basis. So, what are the reporting requirements? Is he going to be giving us interim statements every 6 months? Is he going to give us year-end financial statements? That's the stuff that we will look at to protect our client from that side.
Okay. Very, very interesting stuff. I think we covered about everything that I wanted to look at in terms of limited partnerships this afternoon. Is there anything else that you'd like to add?
Well, I just want to say, if you're going into a limited partnership of any other kind of deal, it's very important that you show it to your accountant. We would be very happy to look at them. We have a lot of experience and expertise in this field, and I think it would be worth your time for us to look at it, to make sure that all the I's are dotted and the T's are crossed, as they say.
Awesome. All right, ladies and gentlemen, that's it for today. Thank you for spending some time with us to learn more about this interesting topic. Charles, thank you for joining us again.
It's been great, Matthew. It's really nice to see you again.
Great. Yeah, you too. And to our viewers out there, remember, if there's any more advice that you'd like on real estate investing, real estate tax questions, real estate finance, or real estate as a whole, you can book a call with us using the link below. And until next time, happy real estate investing.